Today on the show, I have the pleasure of welcoming back a very, very good friend of this show, Mr. Vinney Chopra. Vinney was on this show way back in episode 105, about 18 months ago, and I encourage everyone to go back and give that show a bit of a listen. But for those of you who don't know, Vinney Chopra is a sought-after multifamily real estate expert. Over the past 12 years, he has completed 27 successful syndications, 13 of which have been in the last 3 years. So he's been up to a lot if you don't know who Vinney is. He's also achieved an enormous amount of success, controlling over $300 million in his niche market. And he's vertically integrated. He has 67 full-time employees, all managing his assets. And he has them under two different companies. One is called the Monil Investment Group, which he's the CEO of, and that oversees all the syndications. He also has his property management company, which is called Monil Management Group, and that manages the day-to-day, the actual boots on the ground at the property level. And he has those two companies, which is vertically integrated, which I'm pretty impressive. But to top it all off, he's also a best-selling international author for his new book, or his book that's been out for a little while now, Apartment Syndication Made Easy, a step-by-step guide by Vinney Chopra, obviously. And he's also the host of two podcast shows, not one, but two, and that is Syndication Made Easy and Mr. Smile's Motivational Talk Show. To top it all off, Vinney also moved to this country over 40 years ago with only $7 in his pocket, and he's achieved all of that here in the United States. So I'm really bloody pumped and excited to have him back on the show today. So enough out of me. I'll shut up. Let's get him out here. G'day, Vinney. Welcome back to the show. How are you doing today?
Hi there. Hi, Reid. Thank you so much for inviting me back. It's a pleasure. I hope I can add some value to your wonderful audience.
Well, mate, that introduction there is pretty freaking awesome. Big pat on the back, I think we have to say. I think you've done obviously a lot in the last 40 years. But since being on the show, maybe you want to give us a quick bit of a snapshot over the last 18 months. What have you been up to?
Oh, sure. Reid, actually, I've been investing in real estate for over 35, almost 38 years, but multifamily for 14 years. And in the last 18 months have been spectacular. I didn't purchase anything in 2018. By the way, last year, we are doing this in December. But what happened was overbidding was going on a lot. And I just couldn't take my money or my investors' money to pay overpriced for the properties. So this year, it's been tremendous. We have closed on with my partners, Enzo Multifamily, very nice people, and my friends on $52 million deal. We did that. That was 27th in my acquisition or syndication. 28th one was last week, by the way.
Wow, congratulations.
So we thought we'll kind of close the year with a bang, and 35 million one we just closed also, Princeton Park.
That's awesome. That is really, really awesome. And congratulations, by the way. But I think you bring up a really good point, because I'm also in the same shoes as you, meaning I'm a syndicator. I didn't close on one deal. I closed on 3 deals last year in 2018. The first 8 months of this year, to 2019, I didn't close on a deal till we closed on Lake Creek for about $46 million in Austin, Texas in September of this year. And I just closed on a small one, 106 unit. But you bring up a really good point, is that people are overpaying for it.
Yeah.
And I think the real nuts and bolts of today's show is going to be in and around why are people paying for it and why have we seen this shift. You were very successful before 2018. 2018 hits, nothing happens for you. Similar with me, except that happened to me in the early part of 2019.
Sure.
Why are people overpaying for all this stuff? Why is multifamily the hottest thing since sliced bread?
Well, that's a good point. I mean, the big thing is, of course, the pent-up demand. Everybody knows, the millennials are liking portability. They're liking to, telecommute. They want to move with the job, and they're changing jobs even more, faster and furious like that. Also, the baby boomers are retiring. They're downsizing, things like that. So there is pent-up demand. The biggest thing is, when there is interest rate so low, the expectations of the sellers rises up.
Right.
They feel like, oh my gosh, the buyer can afford much more mortgage now, with the interest rate being 3.65, 3.72, 10-year fixed, 5-year of interest only. Those are the terms we are getting, right? So expectations have been risen. But the big thing is, the cap rate in certain area, like the one we bought for 52 million one, we got 6.10 cap rate. The
Wow.
going rate was 5.75. So we made the money right there when we bought it because we put some hard money on day one. So that was the reason we got that deal. About $1.5 million, I find, was the difference between the top offer and our offer, and they took ours. And when we appraised it, it came higher. So and I would like to say that, stick to your guns, stick to your criteria that you have and what we have, myself and Enzo Multifamily, we underwrite it together, and we don't want to overpay. As a matter of fact, we have passed on some properties, just to let you know, and other syndicators have picked it up. Oh my gosh. So we did not want to take that route of paying $1.5 million extra, but they did.
Right. And you bring up such an interesting point, because cap rates are, and picking up at a 6% cap rate, that's really awesome, because I know a lot more cap rates are lower than that. And I picked up things this year at 4.8, 4.5% cap rates. And you got to understand what that means. Yeah. So for you, Vinny, what does the entry cap rate mean when you go and buy an asset? And how's that an indication of whether the deal is going to be successful or not?
Very good point. I would say, Reed, I gave a lot more credence to the cash on cash more than even the cap rate, by the way, because if I fall in love with the property, the neighborhood, like we are buying now, B plus in A areas, we can afford, 10, $12 million in a couple of days, things like that. So our investor base has kind of moved up higher. I used to be in the C minus. We have sold them, and some of them we are selling. But now my base is kind of grown to higher number of dollars that I can raise. So we are actually more after cash on cash. I would like to tell everybody that's what had been my mantra for the last 14 years. And I've done quite well with that. Cap rate, I do want to get a little bit higher cap rate than the norm going on. And many times the sellers will take it to, give you the deal if they feel you will close. Mm-hmm. That's the performance, and I've closed on all 28, by the way. This was the 28th last Tuesday. Right from starting of the LOI stage until the end, I've closed 100% of the deals. So we just got a good track record.
No, that. You bring up a really good point, but you mentioned cap rate and cash on cash. And for those listeners out there, they are related. They are related. To go and get a 4% cap rate means you're going to have, if your interest rates are 4.5 and you have a 4% cap rate, you're inverted. There's no cash flow. Yeah. So what Vinny's trying to say is that cap rates matter first and foremost on the entry point. But the real thing is, if you want cash flow out of the gate, you need to have that spread. So if you're getting an interest rate at 4% and you're picking up an asset at 5%, there's a 100 basis point spread. You're probably more than likely going to have cash flow. But it's also to do with where you're going to improve the asset to come year 2 or year 3. And so there's also what's called a stabilized cap rate. So Vinny, what do you look for when you've obviously got your entry cap rate? Maybe it's a little bit slower. Your interest rates are, maybe there's only a 50 basis point spread between your cap rate and your interest rate. But what do you look at a stabilized cap rate in, say, years 2 or year 3 to see where you're going to get the asset to over a short period of time? And is that achievable?
Very, very true. What you're saying is so right, Reed. The thing is the value play we call, and with the business plan, we are always looking for where are we going to make a difference, right? Where the property is coming from in the last 18 months or 12 months and 3 months, of course. The lenders look at 3 months trailing. But the big thing is, what are we going to do with it as we take the keys? Is right. The frontage, we're going to improve the frontage, the traffic. Are we going to do certain things in the, amenities? For example, the one we just bought, 35 million one, it's closed last week, so I could say the name, Princeton Park in the tech sector, right there in Florida. And the rents are like the differential is $400 per month from what people are paying. And in our estimation on our underwriting, we only took $200 not from like $100 to $400. We could have gone much higher. We just took $200 in our projection. and we look like we're going to be doing great. And we raised 1.7 million. It's a 2003 built property already. It's beautiful property, lakes all around, and block construction, the whole bit. The interiors are awesome, but we're going to renovate even bigger to make them smarter homes, and do the valet park, valet trash, and then dog parks, dog washes, and do a lot of great things inside the interior to bump up the rent. So what I'm trying to say is that we are going to be increasing the value from 35 million to almost 42 million, $7 million within 1.5 years.
That's the projections, right? Hopefully,
Yeah.
hopefully those assumptions come correct, because $400 is a lot, and in today's market,
we are projecting 200.
Right, and I think that's the message, right? One of the big things that I as myself, looking as a syndicator, I always look at how many units I can get. That I break them down into three. I've got my gold package on my gold or platinum package in terms of my renovations. I've got a silver package and I've got a bronze package. And how many in your underwriting, and how, and this is for people listening to the show, when you're looking at a syndicated deal, you want to ask the syndicator or the operator, including Vinny, myself, whoever you're working with, how many of those gold packages are you assuming the property is going to have? Because you've got to also remember that there's an upper ceiling of what the demographic can pay in that neighborhood, right? And if you go and think, I'm going to do 100% all at $400 rental bumps, it's not going to work.
No.
But if you say, I'm going to do 30% at a 400, I'm going to do 50% at 100, 150, and I might do another 25% at like a $75 bump. And obviously your renovations are going to be different. You might spend $8,000 on the platinum, you might spend $5,000 on the silver, and you might only spend $3,000 a bit of paint and flooring for your $75 bump. But you've got to look at that, right, Vinny? And that's what you look at when you say $400.
100%.
That's probably a bit of a broker speak, right? And you've got to bring it back down to a more realistic.
Exactly. You have to really look through the market comparison rents through, definitely. But you're right. I mean, the broker's always in the pro forma OM. When they do their projections and all that, they give you the high limits and all the things are rosy. So you have to kind of throw that away totally and look at the real current rent, what is going on, and also ask the brokers, because they are making commissions. Ask them to give you the market rent study of the apartments that you would like them to do it, not the one in the operating agreement.
Right.
In the operating memorandum, we don't want that, because sometimes they take only 1 or 2 properties, then they go far away, which has got the higher rents. But you want to really ask them to do, hey, these 6 properties, can you send me the report? Or like we do yard metrics, we do, CoStar, things like that. So that's also very good way. Apartments.com is humongous. I teach that all the time. The best rents right now. I mean, what you want to find out about any apartment, you just go to apartment.com, print out their list. You have it right there also, because they are the most current.
Right. No, apartment.com is really good. We do use it as well, and they're related to CoStar. For those people who don't know who CoStar is, it's the monthly subscription, I think it is, but it's the service data of every single subsector or MSA in the United States. But do take it with a grain of salt, because that is the market rent, right?
Yes.
It's not the actual rent. And what they have on a website does not necessarily correspond to what a tenant will actually pay.
Not at all.
The delta is, what is it called, Vinny? It's called?
It's loss of lease.
There you go. Exactly. So just for those listeners out there, it's really all these free, awesome things that you want to look at an apartment. You want to go and look in the area. You want to use Google Maps to check it all out. But remember, apartments.com do have what's called a gross potential rent, the GPR, and that's not necessarily what a tenant might actually pay.
And another thing is about the Rentometer. I think some people, some people like to subscribe to things, but Rentometer is not bad. But you got to look at it. The very best way to really find out the right way is to pick up the phone and call, or have your assistant call 5 or so, apartments and ask them, hey, what kind of specials and things like that. And of course, who might know about that neighborhood are the property management companies also. So many of the students of mine, they are starting out or they are in the intermediate level, so they do need to get a lot more focus on the local market, and they can get a better flavor of it, color and flavor, by talking to brokers and the property management company.
Exactly. No, I 100% agree with all of that. And making it, the message for all of this, guys who are listening to the show, if you're furiously writing down notes, is make sure you're using apartments.com and rentometer.com, but also don't be hesitant to pick up the phone and ask for what leasing specials are there. We're in winter right now in the northern hemisphere.
Yep.
Rents are a little slow.
Yep.
Traffic through the door around the holiday season is a little slower. So you might have a few more specials going on, and you got to factor that into concessions when you're underwriting a deal. And there's always a bell curve. In the summer, people are moving and there's a lot of traffic, but in the winter it slows down a lot. So you got to understand that. But Vinny, tell me a little bit more about how you become vertically integrated. I think that's a really cool part of what you've done with Monil Investment Group. When did you bring in property management? What stage were you when you thought, I need to do this by myself instead of going out to third party?
Totally. Reed, actually, I started in 2008 or so, let's say. So we had hired a very nice company from Dallas, by the way, and they were managing 22,000 units back then. And we were just small potato, right? 109 units, because my first one was 14 units. We were managing ourselves. It was not that bad. But when we bought 109 units along with 101 storage units and a commercial building all together, we were finding, my partner and I were at the property a lot more than the managers and then the other people. And they were having difficulty, finding the community manager, maintenance people. That's when we decided, when we bought the third or the fourth asset, I think, we said, let's just start our own company. I said, love it. Love the idea. We were looking around then to find the best property management consultant, and we hired her and paid like $25,000 to $30,000, I think. She flew into San Antonio. At that time, we were buying near Austin and San Antonio. And within 4 weeks, she got our company all started with manuals, with payroll, with hiring, with job descriptions and everything. That was the best investment we did, to be truthful. That was back in 2009 and 10. So Ideal Investment, Ideal Management Group, those are my two companies before with the partner. And then Monil Investment and Monil Management are the new companies, which my wife and I own fully integrated, So we have had really good luck with, because we get into the pulse of marketing. The billing, the authenticity of the invoicing, because everybody knows that we get gouged, all the time. When it's not your money, they spend more freely and everything. I tell my team, and we give great bonuses in our employees. Our team members. Every 6 months, we give bonuses, performance bonuses. They get medical benefits, they get insurance, they get everything. So it's good to build camaraderie and the culture. And that comes when you're vertically integrated.
How many units do you currently have right now?
At the peak, I had 4,100 units, but we have sold quite a lot. My old company, 14 syndications, we just sold the last 2.
Right.
So, we are now selling some more in the Texas area. I sold one in Atlanta also just recently. And we are just, building. I don't know how many we have now, but, selling and buying, and some are on the sale. I just signed a contract for another one in Texas. And then we are looking for picking up about 220 million more worth in 2020. So that's awesome. Where we are getting geared for the next year.
But tell me how you've had 2018, you didn't pick up anything. How are you picking up 200 million in 2020?
Well, we picked up 87 million this year.
Right.
In just 5 months, because our bandwidth have increased a lot. I can qualify for almost $45 million loan now, with the net worth and everything. So it's just changed the game for me and my partners, and we can go bigger and bigger. We're looking at $100 million deal now, actually.
Wow.
Pocket listing. We just toured another one as we just closed on Tuesday last week. Wednesday, we were touring for the next one.
That's awesome. That's congratulations. I think that's exactly, but this is all success, right? You know, success is great and well done, but there's got to be some challenges along the way, particularly in and around the property management. Property management's a hard game. And I know as being an asset manager for my company, we have 1,700 units. I'm constantly trying to instill ownership on the on-site team
Yes.
to manage like owners. Now, the sort of conundrum we have is that you pay these on-site managers maybe $45,000, and they're managing 20, 30, $40 million assets. How do they think? It's a struggle for me to try to instill in them a culture, even though I use a third-party property manager as I'm the owner, but I want you to think like I think. And it's really tough when, you know, I just asset manage them and they're still third party to me. How did you go about creating that culture in your business to get those on-site managers to own what they do? Because it is tough, right? You know, not saying that everyone out there who owns $40 or $50,000 can't think like we do, but you have to have the mindset. And if you don't have that mindset, or you feel like you're under the pump, you can sort of lose sight of that. And that's where I've found it very hard to instill that confidence within my team. So what sort of tricks do you do within your culture?
Very, very important what you're talking about. And Reed, I've gone through that, and my companies and my teams have gone through what you're talking about. The biggest decision I made in my company was to bring the accounting very close to where we live, rather than keeping accounting far away, and to have the right vice president of financial affairs. I mean, I'm paying her good money, but that's the best thing I ever did, because she started to invest also with me. And then we grew the money, doubled, tripled, and all that. Then her husband and everything. So alliance came, right? That's a big part. Alliance, buying into what Vinny's about, how transparent. Our whole operation is very, very transparent to the investors. They can ask for bids. They can ask for invoices, bank statements, anything and everything, no holds bar in our companies. That's the best thing. So that really brings into our culture also. Hey, investors can show up anytime without telling you. And they're going to be, looking at who is doing what with the leasing and so forth. And I say that in my presentations also to the investors in my meetings. Every quarter, I remind them that, they could fly without telling me, and they can shop the property. They could do this, they could do that, all that. But the big thing is, when I'm out there with them, I spend time sitting down with them, and, right from the small, right from the bottom to the top, and then do camaraderie things. We do the crawfish boil, and, we do, special barbecues, and we even have preferred vendors pay for all the food and everything. And, they have budgets. So it's good to even ask them to get involved, and then have incentives. And like I said, we give performance bonuses and all that. So it's just that try to pay them $1 more. That's a big mindset. I always believe that. Would they be really more focused if I paid them fairly and squarely and gave bonuses and all that? So what I find is, in managing all these years, make sure that you're giving them that increase after a year, or 6 months, whenever you told them, right? And you do the performance, and then you increase a little bit more, because that $1 increase is going to build their morale. And make sure that you're also having a fund. We have like a, when Harvey hit, right? So my wife and I donated into a fund. We bought like trucks for our maintenance people who lost their truck, or we gave some money for the families because they got displaced, so we were very much out there, for them. See, right. That's the genuineness of the nature, which makes them more work harder for you.
I think that the giving back piece is really important in any culture, in any businesses, because that is what people buy into. And I do hear you that you've got to pay someone a livable wage. You can't not pay them a livable wage. But wage only comes so far, and you have to also have the combined with the cultural aspect, the giving part, the fun to help someone out when something goes wrong, when their chips are down. But also having that culture that people are wanting to work harder because they like the environment in which they work in. That is super important as well. And I think that for everyone out there listening, when you do build businesses in and around real estate, looking at other ancillary income like property management as not only a support leg to your table of your portfolio, but also another income stream that will make your cost of doing business a lot cheaper. But also making sure that you have the right people in those positions in order to execute, because it's such a complex beast that you've built here, Vinneys. But it's really impressive. I want to pivot a little bit onto the market and onto where you talk about 2020 and you've got all these aspirations to buy more and more deals. Where do you think where are we in the cycle? What are you looking at? What's your crystal ball say?
Well, I think everybody's ball. I'm looking the same. I read a lot, and the metrics are a little bit different, quite a bit different actually. It's been the biggest bull. We all know that. Look at 500 hitting the highest, in the stock market, and what a great, tremendous 28%. My money in the bank, in the mutual and all those places is up 28%. That's a pretty good return. So this bull is going to crack sometime. I'm also hearing that it's going to go to 36,000. Oh my gosh. I don't know what to say about it. But the biggest thing is I'm telling my investors, and they are also saying that, Vinney, you are in the right place. And that's how I look into this also. I'm getting into senior living a little bit more into hospitality. And of course, my main bread butter is the conventional multifamily in the B class, where, the not super rich, but, people who are paying $1,300, $1,500 per month, a good class where they are paying about 90% of the payments are done online, and they love the amenities and take good care of the asset, things like that. So I'm pretty bullish. I think that there will be correction, but guess what? Correction could be better for us if we think that way, because when there are some chips are down and you're able to pick up a lot more assets, that's what I'm saying, that I'm psyching myself up. And I'm telling my investors also, get ready with the, 500, 700, 800 million maybe, because what I'm doing is my tier level of investing. So you might have done that too, Reed. That has paid off big time for me. I always thought 14 years back, I don't want to get 25,000. I don't want to get 50,000. And I just increased that to 100,000 back then. And I'm reaping the benefits now because the people who could afford 100,000 or 200, they don't ask too many questions. They are very talented. They're sophisticated. They're very knowledgeable, I should say. They're accredited, most of them. But their peer circle also is rich. So it's just become, my machine has become so well oiled, with 160 or so people only, that they're raising and putting 500,000 at a pop. So we give like 9% preferred at 500. We give 800, 8%, by the way, under 5 up to 200, and then below 200 we give 7%. So this way it gives them more and more ways to invest better, bigger and
interesting.
better.
That's very interesting that you give more precedence to someone who's investing more.
Yes.
It can be a double-edged sword, because you got then a lot of people, there's a lot more management on the back end for who's getting paid what, right? Oh, did someone so invest? A lot more systems.
No. IMS is amazing. IMS service, we work with them. So this way we have all these equations put together: class A, class B, class C, class D. So A is 7% and B is 8%. And then class C is 9% and D is us, general partner. So we very systematically way,
Yeah. That's very, very similar to Pref Mez. Pref Equity. Mez Equity. And ground up construction. We do something different. We got a class A, class B. We offer 10% pref to class A, but they get none of the backside, but they sit right after the debt. then you've got a 7% accruing pref on our Class B, but they get
Nice.
70% of the backside. So it really defines who you want to invest.
Sure.
And who on the long term, when we're getting into markets where cap rates are compressing, that it gets harder and harder, and cash flow does get harder and harder to come by because cap rates are compressing. So do you think, in your opinion, we're going to go into continue to see interest rates fall and thus see, because, interest rates do correlate to cap rates. And
Yes.
when cap rates are 8-9%, particularly in tier one markets, interest rates are probably 5-6%.
Yep.
So now we're in markets where interest rates are 3-4%. Well, we're seeing markets like Austin and obviously LA and New York and some other markets around the country where Class B multifamily are trading for 4% or 4.5%. There's a spread there. Do you think interest rates are going to continue to fall? Or
That's
do you
a
think
good point. I know we just had a 20.25 base, go down. I think there is air in the, people are saying there might be 2 corrections downward next year. And that's going to even fuel, I think the biggest thing also, I feel like, probably if we look back at the recession that we did have almost 12 years back. Oh my gosh, it seems like yesterday, right? But the thing is, multifamily kind of withheld the storm pretty good. If you look at it, delinquencies were not that bad. And also it comes from the culmination when the people lose and homes, they're not going to lose like that. Before it was like everybody had 10 rental homes, stated income, derivatives, and all those things, which are not in the equation anymore. I think not too many people will lose, but if there are layoffs, which happen, shrinking of the economy, that hurts a little bit more. Small shopping centers, hospitality gets hurt, airlines, the budgets get lowered by the company, office space gets shrunk a little bit if there are layoffs, but people do need roof over their head. So that way they will go from, single family to A class or B class. A will go to B, B will go to C, and so on. So overall, I think, and some of the magazines I'm reading, they're saying it's going to be small bump, just a small bump down and then back up again. But nobody's got the crystal ball.
Who are you following right now in terms of market trends? You talk about magazines. What publications do you read?
I use Globe Street is pretty big. Globe Street, National Housing. I'm going to the conference also in January there in Orlando. Multifamily housing conference. That's a big one. We'll be meeting with lots of, economists and things like that. But you're right. I mean, the thing is, if anybody wants to know what might be fixing to happen, please look into the local area. Now, see, the thing is, when we say there is a correction coming, many people just put them and they say, okay, I'm going to be outside the market. Let me just ride out the storm. I heard from people 2 years back, they thought that it's going to be a correction, but there hasn't been any correction. But, we lost a lot of ground there. But the big thing is, please be ready with the money. Be ready with the money, have the loans qualifications done with the broker and everything, and be looking in your back, into the emerging markets. We always say that, jobs, and jobs. So keep your eye in those places, because if the market softens, you'll have opportunities to pick up. But don't get out of the market, because we never see the bottom, until we have passed the bottom. I always say that.
Right.
We never see the top until we have gone over the top, right?
Right. Awesome. Well, look, you've covered so much in-depth knowledge here about just a whole plethora of stuff that we've covered. We've gone through your background and how you've come to this country over 40 years ago and created so much success for yourself and vertically integrated with your company and all the syndications you've done and, your outlook on the market. One thing I want to talk to you about before we do wrap up the show here is the value of raising capital. Like, how important is it to you? You spoke about earlier about your different tiers of investors, and you slowly weeded out the $25,000 and $50,000 investors many, many years ago, and you made a conscious decision to do that. And now you've got folks that without even asking a question, they're just writing checks, and because they trust you. You built up that trust, but you've had to build that up over many, many years in successful deals. You couldn't just go and turn on the tap and, all of a sudden people are writing you $500,000 check. So what's the biggest piece of advice you have for those people out there listening to the show who want to go and start being a syndicator, raising capital successfully? What do they got to do?
Good point. Very good point. I always tell my students also, investors, friends, if you don't have money, you are not able to raise money. You have nothing. You're nothing because you can only scale up. You have so much money personally, you could buy so many units, but to go to 1,000, 2,000, 3,000, 5,000, you got to take the pooling of the money, syndication. And that's why I wrote that book, Syndication Made Easy. The biggest thing I find, Reed, is that you got to have the mentality, the mindset. There is abundance of money. There is $28 trillion with a T in the retirement funds. Only 6%, 5%, some people say 3% is in real estate, just like you and I in syndications. And we can give them more control of their money and sleep at night very nicely. The passive investors, doctors, attorneys, all of our friends and, people circle, because they can feel and touch the asset. REITs are there, but REITs don't give you those kind of returns like we are able to give you. And you are able to give 18 to 30, 26%, returns per year after the cash flow and the back end is joined together. Maybe it will be 16% now, maybe 18, whatever IRR. But the big thing is you got to have the trust built. You got to have the credibility kit, I call it, to build with your experience and everything. But you got to have the drive to have an elevator pitch, I call it. Some people don't believe in that, but that's what it is. You got to send the signal out, and everybody you meet with, you try to find out, if they're willing to diversify and if they, how they're investing. It's just going back to basics. Oh my gosh. I mean, if I were to try today, I'll do the same thing what I did before. My first investor I got with 5 slides. That's all I had. And I had nothing at all. No credits, no nothing. I was not moving from out of San Francisco to go to Texas or anything, but I was genuine. And I was just telling them, they asked me, have you done any deal? I said, no. Do you know what you're doing? I said, no, I'm just learning. I mean, everything was no, 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 but the sincerity paid off. And I think this can happen for anybody right now. Build your brand, build your website, have a credibility kit, and then go meet with your circle. The people who trust you the most are the closest to you, the family, the friends, the people you work with, and go outward and go to some great, wealth clubs. I teach that also, where you are, because you could say that, I've been living in this, like in the Bay Area, I'm living here for 39 years. We've been married 39 years. So that way it brings that, instant credibility that somebody's been around here,
No, I think in the one thing and the whole underlying piece of that is patience, right? Patience is so important. You just said 39 years in the Bay Area. 39 years, guys. Like, Vinny's been doing it for a long bloody time, and it takes patience. And I'm not as old as Vinny, but I know that, if he was to do it all again, he'd be able to go and be vulnerable to these people, pitch them on a one-on-one basis, say no. No, I don't have experience. No, I don't have, I don't know what I'm doing. But through that sincerity and that being vulnerable and down to earth and feet on the ground and being honest, he was able to build a successful company today. And there's so many people listening to this show that they just want to have it happen tomorrow. I'm a millennial myself, and I want to have it happen yesterday. But things take time, and that's the super most important thing that I think your story, Vinny, shows. And I just want to thank you so much, because it's been awesome you jumping on this show today. At the end of every show, I like to get into the top 5 investing tips. Are you ready to get into it?
Yep, you bet.
All right, mate. I know you're going to have a pretty good answer for this. What is your daily habit you practice to keep on track towards your goals?
Thank you so much. I do Miracle Morning. I talk about it a lot. Getting up, in a W2 job, I used to get up at 7 o'clock, 6:30. Now I'm up at even 5 o'clock and 4:45. I'm so excited because I do exercise. I do the gratitude, do the chanting and yoga and all, and set my mind up, what I'm going to have, how can I bring value to the people I will be meeting. My prioritizing my calendar, delegating, to my assistants and all, and then concentrating on the bigger tasks, not the smaller ones. That's the biggest part. Many times we go through the whole day doing small things. They don't get big results. These are the big things. We spend a little bit time with them. They give us the results.
The biggest bang for your buck, right?
So true. Yeah.
Who is the most influential person in your career to date?
I would say I've been a product of a lot of mentors, great mentors like Jim Rohn, Zig Ziglar, Tom Hopkins, he's alive, and Tony Robbins, of course, David J. Schwartz. I mean, all these great books that I have right over here, right next to me, The Magic of Thinking Big, Think and Napoleon Hill. I mean, they are the people who really have shaped me, who I am today. So mentor-wise, I had a very great mentor of mine. He passed away last year, a billionaire. And, he really instilled in me the habits and the positivity, and to really make sure that you are helping people all around you. That's what it's all about. If we can have win-win-win situation for everybody around us, it'll be a harmonious way, and they'll make you grow bigger and better.
Love it. No, I think it's so important having mentors around you, people that you resonate with. And I know you're now a mentor to many people, and it's through your infectious personality, mate. And so awesome stuff. What is the number one tool, now TOOL, tool in your business that you use on a daily habit? So it could be a software, or it could be a piece of hardware, or it could be a book, or it could be a person.
Oh, I would love to say all of them. Zoom video. We manage all our company through Zoom. We get the best webcams, in every office. And when we are doing meetings, we got 6-7 people at the Zoom, and we record our meetings. And of course, the other program I use is Sign Easy. I don't have to print anything anywhere now, and I sign things over there. Of course, the other things of podcasts, of course, and we use also Slack. Yep. We also use Trello for program management. Those are few tools.
That's awesome. Yeah, Zoom, Slack, Trello, Sign Once, or DocuSign, or whatever, sort of those automated things that as you're on the move. But really, it's creating a culture within your business, which you can do it from wherever. Right. Yeah. And as long as you've got internet.
So true.
That's freaking awesome. In one sentence, Vinney, what has been the number one failure in your life, and what have you learned from that failure?
Good point. I think the biggest thing is I'm too nice. My wife and my daughter and my son, they say, "Daddy, you're so nice. You got to learn to say no."
Yes.
So I think I would have been, I feel like I just want to give myself to everybody I talk to. And that's my nature. And that's kind of my failure also.
Yeah. Learning to say no is such an important skill, right? Because when you start out, and for those people who are listening, listening to your success, you want to say yes to everything at the beginning, but you got to also learn to build that no. And if it's not excuse my language, if it's not a fuck yes, it's a no. And that's what you got to build that. So it's really it's important, but it's also really self-reflecting on that, Vinney, is also very, very good. Understand what your shortcoming is. Mate, last question. Where can people reach you to continue the conversation? They want to be in your sphere. They want to check you out a little bit more. Where do they go?
Please go to my website, vinneychopra.com, www.Vinney with a V as in Victor, INNEY. I put an E in there, vinneychopra.com. And also, if they would like to learn something from me or like that, that's learn, LEARN, to 474747. And, I wrote that little book. If you have read it, fabulous. Thank you. Please give your feedback or reviews. And if you have not, that might be a good book. The other book, oh my gosh, my second book is also coming out. Put a little blurb on that one. Positivity. My wife said, read, that's the truth. that book came out and became a big seller. And she says, that first book is for limited audience. I have seen you for 39 years. You are such a positive person. Write a book on positivity. I was starting to write it next morning.
That's awesome. That's awesome, mate. Well, look, I want to thank you, mate, for coming back on the show. You've been a huge influence. I know we've shared the stage a few times over our years. You're a huge inspiration to so many people, including myself. I just want to quickly summarize some of the things that I took away from today's conversation. I think the big thing is that, yes, you are positive and it's infectious. And I think that's really awesome. It obviously, you've been self-reflective enough to say it's also can maybe be, you've got to learn to say no. But I think the biggest thing is that you've figured it out along the way. You've been doing this for over 30 years. You've done 27 syndications. Like, the numbers don't lie. 27 syndications. You're vertically integrated. You've pivoted from one company to another over the years, from the first company into Monil Investments. And you're sticking to your guns. You didn't close on some deals in 2018. Now you're closing deals on 2019, and the future in 2020 looks bloody bright. I just think you're bubbling with energy. Love what you bring to the table, mate. And I want to thank you again for taking some time out of your day to jump on this show. But did I leave anything out before we say goodbye?
No, you are just amazing. I just want to thank you, Reed. And, you're really spreading great knowledge. I was listening to you, podcast, and congratulations on your acquisitions. And I'm so proud where you are and what you're doing.
Well, mate, right back at you, big fella. And I want to just thank you again for taking some time out of the day to jump on this show. We will catch up next time. So enjoy your week, and we'll catch up soon.
Thank you. God bless. Bye-bye.
Well, there you have it. Another cracking interview with Vinney Chopra. Mate, guys, if you love this guy as much as I love this guy, get over to his website at www.vinneychopra.com. Check out his book. He's also got 2 podcasts that I mentioned at the beginning of the show. He is a wealth of knowledge, and he's been doing it for the last 30 years. So you learn from this guy. He's super down to earth, super approachable. Probably needs to learn to say some no some few times, because he always says yes, but he's such an accessible guy, and you got something to learn from him. And the best part about it, he's an expat. He came to this country with $7 in his pocket, and he's built something from nothing, which is a huge inspiration to all of us. I want to thank you all again for tuning in to listen to this show, because we're about increasing your financial IQ. We're going to do it all again next week. So be bold, be brave, and remember, go give life a crack.